All right. So you're thinking about maybe taking a bite out of Cava Group, or CAV, as it's known,
Right.
on the stock market.
Yeah.
Well, you came to the right place because we are diving deep
Yeah.
into whether this is an investment that is worth adding to your plate.
Yeah.
Especially since its stock price has gone crazy. It's skyrocketed 243% in 2024.
Wow.
We'll be using this awesome article from the Motley Fool to guide our deep dive. And
Great.
let me tell you,
Yeah.
things are about to get really interesting.
Okay.
We're talking impressive growth, comparisons to Chipotle, but also a pretty hefty price tag.
All right.
So are you ready to see if CAVA is the real deal?
Absolutely. The Motley Fool has a pretty good track record, right?
Yeah.
Remember when they were all over electric vehicles way before they became mainstream?
Yeah.
This article definitely has everyone buzzing about CAV.
It does.
Let's dig into those numbers.
Okay, let's unpack this. 243% growth.
Wow.
That's not something you see every day, especially in the restaurant business.
It's definitely eye-catching, but we need to put that into context.
Right.
While the market overall has been pretty good,
Right.
243% is still exceptional.
Yeah.
Remember, the restaurant industry is notorious for being tough.
It is.
So what's driving this incredible growth?
Well, the article says Cava's revenue jumped a whopping 39% year over year.
Wow.
And that's not just from opening new restaurants.
No.
They also saw an 18% increase in same-store sales,
Wow.
meaning folks aren't just trying it once, they're coming back for more.
That's a really good sign.
Right.
It tells you they've hit on something that people crave.
Yeah.
And the article makes an interesting point
Okay.
about KAA filling a specific niche, the demand for healthy, fast casual Mediterranean food.
Okay.
You know, like Chipotle,
Right.
but with a fresh Mediterranean twist.
Chipotle with hummus. I can definitely get behind that.
Yeah.
But what's fascinating to me is that Cava is already turning a profit, which is pretty unusual for a young restaurant chain.
It is.
Wouldn't you say?
It's definitely impressive they're reporting a 25% restaurant-level profit margin,
Wow.
which is outstanding, especially when they're still opening so many new locations.
Yeah.
A lot of young companies are focused on growth, even if it means losing money in the short term.
Yeah.
But Cava seems to be doing both, expanding rapidly and de-making money.
Right.
The CEO talks about hitting a tipping point in consumer demand.
Interesting.
It's like they figured out the secret sauce, literally.
Okay, but speaking of secret sauce, the article brings up a comparison.
Yeah.
That's sure to pique our listeners' interest. Cava to Chipotle.
Oh, okay.
Now, Chipotle stock has been a winner for a lot of investors,
Right.
so that's got to be music to anyone's ears.
Yeah.
But I have a feeling you're about to hit us with a butt.
You know me too well.
Yeah.
It all comes down to valuation.
Okay.
While Cava's got amazing potential, their current price-to-sales ratio is sitting at a steep 20. To put that in perspective, Chipotle's is currently at 7.4.
So basically, the market's already baking in a ton of future success
Yeah.
for Cava. But what does that even mean for someone who's just starting to look into investing in them?
Right.
This whole price-to-sales ratio thing.
Okay.
Can you break that down for us?
Imagine you're at a flea market
Okay.
and you come across a vintage record player in mint condition.
Oh, okay.
Everyone's raving about it, saying it's the holy grail of turntables. But the seller's asking price is 5 times what you'd normally pay for a record player.
Okay.
Now, maybe it's worth it.
Yeah,
Maybe it's got this incredible sound quality.
Right.
And you're convinced it'll become a collector's item.
Yeah.
But there's also a chance you're getting caught up in the hype and overpaying.
Okay, I see where you're going with this.
Yeah.
So in Cava's case, the market's basically saying this record player might be a Stradivarius, but the price tag is making me sweat a little.
Exactly. That price-to-sales ratio of 20 means investors are betting big on Cava's future.
Yeah.
But it also means there's more risk.
Right.
If Cava doesn't live up to those lofty expectations, the stock price could take a hit.
Okay.
Remember back in 2009, Chipotle was trading at a much lower price-to-sales ratio?
Okay.
Something like 1.86.
Wow.
A $1,000 investment back then would be worth over $33,000 today.
Oh my gosh.
That's the kind of potential we're talking about.
Right.
But it highlights the importance of getting in at the right price.
All right, so we've got a company with impressive growth. They're turning a profit. And they've got a menu that seems to be hitting all the right notes with consumers.
Right.
But that stock price is giving us pause.
Sure.
So what's the bottom line here? Is this an investment our listeners should be considering?
Well, the company itself seems to be firing on all cylinders.
Right.
But that high valuation makes it a riskier bet.
Okay.
This is where you have to think about your own risk tolerance. Are you okay with potentially paying a premium for a company you believe in?
Yeah.
Or are you more cautious looking for a deal?
So it's not just about whether Cava is a good company.
Right.
It's about whether it's a good investment for you at this price.
Exactly.
That's a really important distinction.
It is.
What are some of the things our listeners should be considering when making this decision? I think it's easy to get caught up
Oh, yeah.
in the excitement of a hot stock,
Yeah.
especially when you see those impressive growth numbers.
Totally.
But it sounds like taking a step back and really understanding what you're paying for
Right.
is key.
Absolutely. It's like anything else you buy.
Yeah.
You want to make sure you're getting good value.
Right.
And with stocks, that means looking beyond the current hype and digging into the fundamentals of the business.
So what are some of those fundamentals our listeners should be paying attention to?
Well, we've talked about the price to sales ratio,
Right.
which gives you a sense of how the market is valuing the company's future growth potential. But you also want to look at things like their profit margins.
Right.
Are they consistently making money?
Right.
How much debt do they have? What's their track record of opening new restaurants successfully? These are all clues that can help you gauge whether the current stock price is justified.
It's like being a detective,
Yeah,
piecing together all these different clues to see if the story holds up.
exactly.
But let's get back to this comparison with Chipotle for a second.
Okay.
It's tempting to think, well, if Chipotle did it,
Right.
maybe Cava can too.
Yeah.
What are your thoughts on that?
I understand the comparison.
Yeah.
And it's true that both companies are tapping into that desire for fresh, customizable meals.
Right.
But it's important to remember that Chipotle was also a much smaller company back in 2009 with a lot more room to grow.
Yeah.
Cava is starting from a different point,
Right.
and that influences their valuation.
So even if Cava is on a similar trajectory, the price you pay today could be a lot different than what early Chipotle investors paid back then.
Precisely.
Okay.
And that's why it's so crucial to look at the individual company's situation rather than just drawing a straight line from past successes.
Okay, so let's say our listener is really intrigued by Cava, loves the food, and believes in their long-term potential.
Okay.
What are some practical steps they can take to figure out if this is a good investment for them right now?
Well, first, I would say don't let the fear of missing out rush you into a decision.
Okay.
Take your time, do your research,
Right.
and really understand what you're getting into.
Easier said than done when you see that stock price going up and up.
I know, it's hard.
Yeah.
But remember, investing is a marathon, not a sprint.
Right.
Read more about Cava's business model.
Okay.
Check out their financial statements and see what analysts are saying about their growth prospects.
Right.
You can find a lot of this information online
Yeah.
through resources like the Securities and Exchange Commission's website or financial news outlets.
And this might be a good time to mention if all this talk about financial statements is making your head spin.
Yeah,
It's never a bad idea to talk to a financial advisor.
absolutely.
That can help you understand the risks and potential rewards of investing in a company like Cava.
A good financial advisor can help you assess your own risk tolerance and investment goals and guide you toward investments that align with your overall financial plan.
So we've covered a lot of ground here, from Cava's impressive growth and profitability
Yeah.
to the cautionary tale of their high valuation.
Right.
We've talked about the importance of doing your homework and understanding what makes a company a good investment for you. But before we wrap up, I want to circle back to something you mentioned earlier
Okay.
about Cava's secret sauce.
Right.
We've talked about the numbers.
Yeah.
But what about the food itself? Have you tried Cava?
You know, I actually haven't had a chance to try Cava yet,
Okay.
but I've heard great things about their food. Fresh, flavorful, and customizable.
Yeah.
And that's an important factor to consider,
It is.
especially when you're thinking about a company's long-term potential.
It's like anything else. If the product isn't good, the hype eventually fades.
Yeah.
So maybe that's the final piece of the puzzle for our listener.
Okay.
Go try Cava.
Yeah.
See if you believe in the product as much as you believe in the company's potential.
Right.
Because at the end of the day, it's not just about numbers on a spreadsheet.
Yeah.
It's about investing in something you believe in.
I love that.
Sometimes the best research you can do is with your own taste buds.
For sure.
All right, so we've given our listener a lot to chew on today. Market trends, financial ratios,
Yeah.
and even a little bit of culinary homework,
Right.
hopefully they're feeling more informed and empowered to make a decision
Mm-hmm.
about whether Cava is the right investment for them. But before we let you go, I want to leave you with this thought.
Okay, I'm all ears.
Instead of asking, is Cava good company? Maybe the real question is, what price would make Cava a good investment for you? It's like finding that perfect vintage record at a flea market.
Yeah.
It's a gem, but are you willing to pay the seller's asking price?
Right.
Or would you rather wait and see if you can snag it for a little less?
That's a fantastic way to put it.
Yeah?
It's all about finding that balance between your enthusiasm for the company and your comfort level with the price.
Right.
Some folks are happy to pay a premium for something they truly believe in,
Yeah.
while others are more patient waiting for a better deal.
Right.
There's no right or wrong approach. It's all about what aligns with your individual investment style.
Exactly. And that's why doing your research is so important.
Yeah.
Go beyond those flashy headlines.
Right.
Dig into those financials
Yeah.
and really think about what price makes sense for you.
Couldn't agree more. And remember, even the experts don't have a crystal ball.
Right.
Investing always involves some level of uncertainty.
It does.
But by being informed and understanding the risks involved,
Yeah.
you can make smarter decisions that align with your financial goals.
So to our listener, we hope this deep dive has given you a better understanding of Cava Group,
Yeah,
this exciting world of fast casual dining,
for sure.
and most importantly, how to think critically about those tempting investment opportunities.
Yeah.
Always do your research.
Absolutely.
And maybe even have a chat with a financial advisor before making any investment decisions.
Couldn't agree more.
Until next time, happy investing.
Yeah, happy investing, everyone. Happy investing, everyone.